Hello everybody, this is Simon Clarke from Trade with Precision, and this is a special report on the post-Brexit impact and subsequent market implications. Now, last night the UK voted to leave the EU in a historic referendum, and as expected, there's been a huge amount of volatility in a number of markets. Now, before we take a look at the markets and the markets affected specifically around the Great British Pound and the UK stock markets, what I want to take a look at is what we can learn from history with volatile times in the markets. And there is a fairly recent one that we can refer back to. So I just want to come back and take a look at the dollar Swissy here. Now, we had a huge move here in dollar Swissy. This is a weekly chart, and you can see the subsequent move here in the dollar Swissy. This was there was a number of reasons around this, but effectively the market collapsed. It didn't sort of operate as a market, and which exacerbated the problems. What I'm more interested in is, yes, we've had a huge volatile move here, but it's the subsequent price action after that, and we can see that, well, in this case the market has moved back. It eventually actually came back to recover all of its losses and came back to its original point. Now, if we sort of mark a fib study into here, we mark a fib study in there, we can see our 50% sort of fib level and our 61.8% fib level. And what we find in a lot of cases when there's been volatile movements in the markets, often caused around news, is we get the initial move and then a retracement, and quite often the retracement, or the sort of safe retracement if you like, or predictable retracement, comes back towards the sort of 50 or 61.8% fib level before sort of normalization of the markets occurs again, and the markets sort of then price in current sort of intrinsic value. Now, we got that move here. In fact, we can see what happened with the Swissy. It actually moved on much further. So what I want to do is to come and take a look at some of the markets here that have been affected overnight and start to look for, well, what might be the sort of potential moves and what might be levels and potential trading opportunities for us as traders we can look for. So I want to come and take a look at pound dollar to start with. Now, if I come down to the daily chart here, we can see the move last night. There's always been here a couple of significant levels here in the market. We've got 1.4, big key level. We've got sort of 1.48 up here, or just under, which has been the highs that the market has been testing sort of more recently. Now, if we start to sort of analyze this, we can see that the market's already came down to 1.3200 here, and now the market's already retraced quite a distance already. So the question is, where is the market going to retrace to? Where potentially may it pull back? So what we can do is we can start to draw some fibs in here to start to sort of look at our analysis. And we can see that when we mark a fib study from the high to the low of the recent move, we don't really get an awful lot of help. We've got our 61.8% fib level up here, our 50% fib level. Neither of them cluster with that 1.4 level. However, if we start to look in here a little bit more closely, we could probably start to look around this sort of 61.8% fib level. If I mark a line in there, you can start to see, in fact, if I just sort of mark that just slightly higher, so it sort of clusters with that fib zone, we've also got quite a significant support and resistance structure here. We've got support through here, we've also got resistance, support, resistance again, so quite a significant level in cable here. So market's already retraced quite quickly already up to the area where it is. Obviously keen on the lower time frames, there's a retracement coming. What I'm looking for is in the short term sort of retracement up here towards, I'm going to obviously be keeping an eye on 1.4, but keeping an eye on a move up here towards the sort of cluster level that we have up here around this 61.8% level. Now this is 1.43 sort of 2, so 1.4325 area. Now let's come and take a look at a couple of others. Now if we look at euro dollar being the biggest market in the world, of course, if we come to the weekly chart, the daily chart I want to come to, so we can see the move here. We've got a couple of levels marked in here. We've got the old lows here. We've also got 1.1300 up here, which was quite a significant level. I think there is also another level in here. If we start to mark in around 1.12, and let me sort of mark that in, we can see we've got just above that, we've got lows, we've got the support here, we've got the resistance, we've got the support again. Keep an eye on that level. Let's just sort of scroll back a little bit through time. We can sort of come back through here. We can see that there's been subsequent tests back here where the market's found resistance, found support. So 1.12 has been again quite a key level on euro dollar. Again, let's start to mark in our sort of fib studies in here. And again, we can start to see that this sort of level sort of coincides right in between the 50 and the 61% sort of retracement area. Of course, doesn't mean to say the market is going to retrace to these areas, but you know, there's getting a pullback to sort of equilibrium, a sort of at least a 50% pullback is quite common after these huge volatile moves, and we see that we're almost there at this moment in time with the euro. If we come and take a look at euro GDP, now euro GDP we might expect is again another market that is highly affected with this vote. My view here is we know the result here of Great British Pound, but what else for the euro? I mean, the decision that's come out of this politically in the UK is one thing for the UK, but it also has implications for the euro as well. So this one's maybe not so sort of easy from a fundamental perspective. However, it does look rather nice from a technical perspective, and I'll tell you for the reason why. If we look at the market here, 8,000 has been a key number on euro GDP. Big round number, been a significant level. In fact, you know, we had a test of that level fairly recently, but I think there is a stronger level just underneath. I like to look at price action. We can see that price action has tested this level just underneath the sort of 8,000 a number of times, much more precisely tested as support and resistance. Again, if we start to build our analysis here and start to see what else we've got clustering around this area, we can see that this level also sort of coincides quite nicely with a straight 50% pullback of that move. So we've got a big move here. The market's made a new high. A pullback into this area actually clusters with a prior support and resistance structure. Also comes in with the previous high. Also comes in with a 50% period of the move. So looking for if you're bullish on the market, you know, looking for retracements back into this area and possible turnarounds for a continued move higher would be a nice area to start to look for that. Before we go, let's move on and take a quick look at the impact of some of the metals. Now, gold, known as a safe haven product. If we come and take a look at gold here on the daily, we can see the move. We've had a big spike high in gold. As expected, gold is safe haven, so money's been ploughing into gold for that purpose. In fact, I think the analysis is a little bit more clearer if we start to look here on the 4-hour chart. So what I want to see on the 4 hour is if we mark a level in here around the 1.300 point here, we can see that there's been a 1.300 has been a significant level here in the market. The market's already started to retrace back, as indeed with the other markets that we've just looked at. But if we draw our fib study in here, we can also see that this area sort of coincides with a sort of almost a 61% fib level, but it's right in between the sweet spot there between the 50 and 61% area. So pull back into these areas could be good area for the market to potentially find support and for the reaction to have played out. Now let's take a quick look at the stock markets as well. So when we look at stock indices, the one that I prefer to trade out of all of them, certainly compared to the FTSE, is the DAX. And if we come and take a look at the move here on the DAX as well, we can see that we've got a couple of levels marked in here, 9,400, then just sort of above that level up here where there's also been previous support and resistance. So these are market structure levels. If I just sort of scroll back in time through this market, you can see how many times these levels have been tested, right the way back through history. They've been support and resistance. So because they've been so tested and the market's respected them historically, then there's no reason for me to expect that the market won't react around them, at least around the sort of current condition. Now we've got a huge market gap here, so what I want to do again is to mark my fib study in between the two. We can see that these levels, they don't really tie up with any particular fib level at the moment, but if we look at it a little bit more closely, we could also see just around that 50% mark. If 50% retracement was here, you can also see that it clusters with these previous lows, which has also been support and resistance in the market. Has even been resistance right the way back here too. So again, these are sort of areas where I'm sort of looking for the initial kickback to retrace back to, and then I'm looking for decision points around that time. So these are the markets that I'm looking for. Certainly hope you find it useful, and stay nimble and keep focused on the markets. Bye for now.